Hello, this is Randy Lindsay, and welcome to Hawkeye's Update. The biggest item on the news today is the attack on the Saudi Arabian oil production facilities at Abqaiq and Khurais. The effect of that has caused oil prices to spike overnight and a lot of volatility in the markets. Although it's uncertain as to the cause, there have been some rebels from Yemen that have taken credit for that, but a lot of speculation is coming out as to who's actually causing that. But the end result really is in the markets. If we look at the daily chart of crude oil, as we see right here, you can see that the consolidation range that we were just in has easily been broken as crude oil spiked up, one of its largest moves in history, going from just under $55 all the way up to $61 at the open last night. A big gap in crude oil. We saw price trade all the way up to the highs, which were right at $63.34 before it rallied back down to its current price of about $60. This is a big wide bar formation. We're looking at this outside of the range, and we've seen some technical indications of this moving forward. You can see the descending trend line, the consolidation triangle that we were looking at in previous updates, where the price was winding up and getting ready to break. Well, it did break, and you can see how price has gone up to a prior price range, but then has come right back down to this descending wedge formation as support. If we were to put on our Hawkeye Zones tool, then we can see the confluence area of overhead supply as price rocketed back up to and stopped just under $64, 63 and change. And we have annihilated the overhead supply right here. So you can see prices coming just under that as it's retesting the break of this region right here. So breaking that, price coming down and coming back up again, we should probably see price ranging between these two regions. Both of these supply zones will go away, and you will see a trade zone between 53.10 and 62.80 with a brand new creation in this area. The outlook is uncertain. We don't really know exactly how it's going to turn out, but risk on, risk off. Right now, risk off is to the United States currency, US dollar. Risk on is to Euro, India, any of the Australian or New Zealand currencies. So you were looking for the change in the momentum here. Canadian dollar is going to be the big benefactor here as it's a major producer as oil prices go back up again. The United States has authorized release of its strategic reserves to try to counter the rising prices. That has caused some calm in the market. And you can see the price rallying back down from 63 range back down into the $60 range. It looks like it's stabilizing and creating some new supply and demand zones there, but watch for the volatility to continue to spike and increase as we saw a well over 10% spike in volatility coming into this. So trade with caution, use your charts to your best ability. Learn more about how you can trade with Hawkeye from our live training room. Also, download a free copy of the software so you too can see and analyze the markets from the Hawkeye perspective. Thank you and have a great day.